Let's unpack the chip sector further with Bernstein semiconductor analyst Stacy Rascon. Stacy, it's great to see you. NVIDIA doesn't report until late-ish November, but of course we have so many signals this week, right? With CapEx from some of the Mag 7. What do they need to show us to keep the NVIDIA party going?
Look, they just need to show us that demand is there and strong and ideally growing, right? I mean, the big concern there's a number of concerns when anything runs this much, but I mean, the biggest concern has just been sustainability. Like the numbers have gotten so big so quickly, you just worry that it can't keep going. And like, as of right now, from everything we can see, it looks like it's still going. Like I get the nervousness. It clearly is not time to worry this year. I don't even think it's time to worry next year. We'll see as we go farther out. But I think at this point, they just need to show that demand is strong and growing and accelerating. And at least from where we're standing right now, everything we can see, things look pretty good, I think.
Right. Stacey, I want to ask you about the story that Seema was just talking about, and that is the idea that Trump especially, but perhaps both candidates would crack down on manufacturing of chips inside of the U.S., but what we've seen from TSMC versus what we haven't seen from Intel. Sort of talk about that and what it would mean if TSMC wasn't able to ramp up here in the United States.
Look, I'll be honest. So I heard Trump's comments as well, and he was, what did he say on Rogan? He said he didn't like the CHIPS Act. He wanted to replace it with tariffs. Yeah. I mean, it makes, look, it's Trump, so Trump is gonna Trump, but it doesn't make any sense, right? The idea that like Taiwan has stolen, quote unquote, our chip making abilities is ridiculous. Like that is not true. And like not allowing foreign companies to make chips on U.S. soil, that is actually what we want. I mean, look, the whole like the idea that we are dependent on Taiwan and that is becoming increasingly an untenable situation is very true. And you know, we want to get leading edge infrastructure built here in the U.S. And to be honest, from a policy standpoint, it really shouldn't be mattering all that much who is building it. I understand why Intel is sort of named the national champion, but if the goal is really to get as much leading edge capacity built here as quickly as possible, we should be giving the money to the folks who can build it. And as of right now, that entity is TSMC. And you're right, you know, there was some news flow of last week that suggested that their yield ramp in Arizona is actually exceeding targets and maybe even exceeding what they do in Taiwan. There are no other players, neither Intel nor Samsung, that can make claims that anywhere near that. So if the goal is to build the capacity and get it here and installed and running in the U.S. to de-risk the supply chain, that's happening right now. And so stopping that would be a problem.
When you're enjoying yourself, time flies. Additionally, NVIDIA's shareholders are enjoying themselves immensely this year. The stock has increased by more than 180%. It might perhaps soar even higher. A little more than 3 weeks from now, on November 20, NVIDIA will release its fiscal year 2025 third quarter results. Is it wise to purchase NVIDIA stock before then? Before its Q3 announcement, investors may want to give purchasing NVIDIA stock a lot of thought. The business has a strong history of exceeding expectations. Aswath Damodaran, a professor of finance at New York University, recently pointed out that for the past 5 years, NVIDIA has exceeded Wall Street's earnings projections in all but 2 quarters. The company has a good probability of reporting higher than expected earnings the next month, if past performance is any indication. 2 possible explanations for NVIDIA's remarkable run of exceeding analysts' earnings projections were offered by Damodaran. One explanation is that the business excels at identifying income and documenting costs in order to surpass Wall Street's projections. Another is that experts' projections aren't keeping pace with the rapid growth in demand for NVIDIA's graphics processing units, GPUs. Damodaran's second scenario seems more plausible to me. Accounting regulations may allow NVIDIA some leeway to occasionally handle an earnings beat. However, over a 5-year period, such manipulation would not feasibly allow the corporation to constantly surpass expectations for almost every quarter. However, the NYU professor's second possible explanation for NVIDIA's superior performance is considerably stronger. Analysts themselves have stated that the demand for NVIDIA's GPUs has unquestionably increased more swiftly than Wall Street had previously anticipated. Do investors think NVIDIA will repeat its success? There are some grounds for optimism based on remarks made by management in recent months. The demand for Hopper GPUs will continue to grow into the second half of the year, according to NVIDIA CFO Colette Kress during the company's Q2 earnings call. Later, she added, NVIDIA anticipates that its adjusted gross margin in Q3 would be comparable to that of Q2. According to the 37 analysts LSEG polled, Q3 sales is expected to reach $32.9 billion, and adjusted earnings per share will be $0.74. Such figures show sequential growth of about 8.8% and 9.7%, respectively. NVIDIA had a 15% increase in revenue and an 11% increase in adjusted earnings per share in the second quarter. Even if the company's growth slows down a little in Q3, NVIDIA might still surpass Wall Street's projections. In any case, NVIDIA anticipates $32.5 billion in Q3 sales, which is less than experts had predicted. Naturally, under its direction, the corporation has been known to sandbag. Does purchasing NVIDIA stock before November 20th make sense then? Perhaps. But there are two things I believe investors should be aware of. First, substantial stock gains are not always the result of earnings beats. After NVIDIA's Q2 earnings in August surpassed analysts' expectations, the company's share price crashed right away and continued to decline for a few more days. Second, and perhaps more significantly, your long-term returns are unlikely to be much impacted by whether you purchase NVIDIA stock before or after the company's Q3 update. Any moment is maybe an excellent time to purchase NVIDIA if you're a long-term investor and think the trend toward increased computing and artificial intelligence, AI, is unstoppable. In light of that, I would be negligent if I did not mention that additional details regarding consumers' enthusiasm for the new Blackwell chips may be the main topic of NVIDIA's upcoming quarterly release. Jensen Huang, the CEO of NVIDIA, has previously called the demand for Blackwell insane. The company's view about the new GPU platform may be the main area where it surpasses expectations in its Q3 statement. We will soon find out. If you want to keep up with NVIDIA's latest updates and keep up with the stock market latest news, you can subscribe to our investing tutorial channel as we post daily updates about the biggest changes and catalysts in the market. So click the subscribe button if you don't want to miss the newest market updates. Now back to today's video.
On fire.
But you like all these names for the long term, I guess. What about the original wave? What did that include? NVIDIA and Google, you said?
Yeah, I think NVIDIA was obviously the big one. You know, super microcomputer, SMCI, that was another popular one that also had a tenfold run. They make kind of a bolt-on application to essentially soup up these data center computers to increase their compute. And then, of course, we got the piggyback move from, you know, Meta and Google and Microsoft and the big tech names that have the AI products. You had AI, you know, C3.8AI, the ChatGPT owner. So all that kind of stuff. But those are the real obvious plays. And I think most of those have gotten to valuations that don't make a ton of sense unless they really just execute flawlessly for the next decade. NVIDIA is the only one that really has some sales to back up their crazy valuation. But even that one, I think, is, you know, getting a little long in the tooth. So you take a name like Oklo, you take a name like SMR. Like, look, SMR went up 190% over the last 2 months, right? But it makes that big move, and then it's only pulled back like 15%. So we're still not seeing selling in there. I think this thing's still got some juice left in it, and you know, can have a lot further to go.
Yeah, look, I mean, NVIDIA, the high is 144.42. The high today was just pennies away. It was 144 as well, but 144.13. So, I mean, it basically hit new highs again today and has been up in a big way, up almost 200%, let's say 187% year to date. So it certainly has been an incredible play.
NVIDIA's August results beat Wall Street expectations. Sales of $30.04 billion came in 122% ahead of the same period last year and beyond analysts' expectations of $28.7 billion. At 68 cents per share, earnings also above projections of 65 cents. Compared to the previous year, that was 152% greater. With $32.5 billion in sales compared to $31.7 billion in views, the leader in artificial intelligence chips also provided greater guidance for the current quarter. The fact that NVIDIA's stock changed in 2023 and 2024 due to earnings is clear evidence of why the investor's business daily approach places a strong emphasis on fundamental performance. NVIDIA had an incredible 239% run in 2023. However, fundamentals are only one of 4 IBD pillars of investing. The other 3 are risk management, market direction, and a stock's technical strength, which shows how well the stock performs in relation to other stocks. According to a trading plan, Huang sold $580 million worth of NVIDIA shares between June 14 and August 9. Data centers and AI applications benefit from the speedy computation provided by NVIDIA's GPUs. The business was a pioneer in the development of graphics processors for use in robots, cars, and healthcare. With the release of OpenAI's ChatGPT in March 2023, generative AI advanced significantly. According to Huang, the iPhone moment of AI was made possible by NVIDIA's AI-capable supercomputer. That assisted NVIDIA in improving its performance. In late 2022 and early 2023, it recorded 4 quarters of shrinking profitability and 3 quarters of declining year-over-year sales. However, in the last 5 quarters, the company's top and bottom lines grew at historic rates. Investors Business Daily continues to give NVIDIA stock a high relative strength rating of 98. Investors can use technical indicators and chart indications to determine if NVIDIA stock is a good investment right now. From the 50-day moving average, NVIDIA is extended. Additionally, shares are extended from a different entry at 131.26. However, the stock is slightly over a purchase target of 140.76 and reached an all-time high. Thus, NVIDIA is a good investment. However, over the coming days, investors should monitor the results of Microsoft, Amazon, Alphabet, Apple, and Meta. So what does this really mean for NVIDIA's stock? Let's find out, but first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button, subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Yeah, we're not going to get NVIDIA for a little bit, Stacy, but you know, every so often you hear, and I'm sure you do it more than I do, well, there's, you know, a small company over here that's developing a next generation chip that's going to ultimately disintermediate or push NVIDIA to the side. I mean, how long is their dominance, do you think, going to last?
Well, I mean, there's always somebody in the wings. That this is an enormous market, right? The idea that there's not going to be others trying to take a piece of that pie is ridiculous. Of course they are. Now, that being said, like NVIDIA's built up their position in silicon and hardware and software and systems and ecosystem over 10 or 20 years, right? And they've put those moats into place. And so anybody that is trying to get in there, and I'm not talking that people can't get little bits. Clearly, you know, AMD and others are getting, you know, little bits, but to be like material in that market, you've got to like penetrate those moats, and it's a very, very difficult thing to do. And especially for a startup, I mean, when you just look at the amount of money that NVIDIA has to invest in these things versus, you know, smaller, you know, very small companies, it's tough. It's very, very tough. So at this point, I'm not terribly worried about some like young upstart coming in and taking a massive amount of NVIDIA. So I'm not even really that worried about larger companies, larger competitors going in and trying to take doesn't seem to be impacting them very much right now.
Generally speaking, NVIDIA is credited with spearheading the AI explosion, particularly in the hardware sector. Graphic Processing Unit, GPU design is at the heart of NVIDIA's operations. Since GPU's parallel processing capabilities make them nearly necessary for high-performance rendering, the gaming sector is the company's largest market. Since AI models need to perform numerous matrix calculations at once, it turns out that GPUs are also very helpful for training AI models for the same reason. It should go without saying that NVIDIA is not the only company that designs GPUs, but its exclusive parallel computing platform, FinVid, gives it a competitive edge. NVIDIA, which has a 70.5% market share for GPUs as of 2016, saw early on the necessity for a programmable architecture because parallel processing programming is known to be notoriously challenging. Thousands of specialized apps now use the FinVid platform. making it challenging to compete with NVIDIA in the parallel programming platform market. Due to this and the skyrocketing demand for GPUs for AI model training, NVIDIA became the most valuable corporation in the world in June 2024 until Apple took back the top spot. Over the last 3 years, NVIDIA has grown at an annualized pace of 82%. In the last year, it has gained approximately 212%, and thus far this year, it has gained 184%. Blackwell, NVIDIA's much-awaited GPU, is already seeing a lot of demand from hyperscalers and is predicted to provide significant inference performance improvements over its predecessors. The GPU has already been reserved for a full year and will be released in Q4 of 2024. In one of the most recent CNBC shows, Stacy Rasgon, a senior analyst at Bernstein, stated the following regarding NVIDIA. As profits, year-end, and the launch of the new platform with Blackwell begin to build up next year, people are once again becoming enthused about the tale. Based on supply chain inspections and other data, it appears that demand for this product is extremely high. The analyst thinks there is a discount in the stock's price. Compared to when the run began a year and a half ago, it is far less expensive now. Although the stock has climbed considerably, earnings have increased even more. The chipmaker's largest client's results this week will likely set the tone for NVIDIA's shares, which are trading close to an all-time high due to excitement about the AI boom, even though the company isn't slated to release earnings for another month. In the upcoming days, Microsoft Corp., Amazon.com Incorporated, Alphabet Incorporated, and Meta Platforms Incorporated will all release their profits. In order to assess demand for NVIDIA's processors, which are highly valued for artificial intelligence computing, traders will be closely monitoring their capital expenditures. According to figures provided by Bloomberg, the group accounted for over 40% of NVIDIA's revenue in the second quarter. The 4 tech titans are expected to reveal a record amount of capital expenditures, according to Wall Street. However, NVIDIA's shares, which have nearly tripled in value this year, could be shaken by any slowdown in the pace of outlays. The stock market as a whole is probably going through a critical period. About a fourth of the S&P 500 index's 22% increase this year has come from NVIDIA, making it the largest contributor to the index's gains. For NVIDIA to maintain this momentum, these businesses must publicly state that capital expenditures are rising, even at a moderate pace, according to Dave Mazza, CEO of Round Hill Investments. You can see a lot of stock come out if anything is subpar. According to the average of expert forecasts provided by Bloomberg, the 4 giants are expected to have invested a record $56 billion in capital expenditures during the third quarter. NVIDIA and other manufacturers of AI-related equipment are receiving a large portion of that spending, which is expected to increase much more in the upcoming quarters. All indications suggest that spending on AI will continue to grow. AI has been a bright spot this earnings season for companies including Taiwan Semiconductor Manufacturing Co. and ASML Holding NV, which makes chip equipment. Along with CEO Jensen Huang's assurances that manufacture of its new Blackwell chips is on schedule and in high demand, this background has contributed to the rise in NVIDIA shares. The largest gainer from the significant investment in AI computing hardware has been NVIDIA. With a market valuation of over $3.5 trillion, the stock reached a record high last week and is now only a little less valuable than Apple Incorporated, the most valuable business in the world. Given that investors believe the billions of dollars the big tech companies have spent on AI have produced comparatively little revenue, there has undoubtedly been some worry about all of this spending. Therefore, when the cohort releases its earnings this week, there will be another area of emphasis. Paul Marino, Chief Revenue Officer at Themes ETS, stated that in order for investors to realize that you're not getting too far ahead of yourself, you must walk that delicate line of investment. The average of expert predictions compiled by Bloomberg projects that NVIDIA's revenue would more than double this year to $125.6 billion. The chipmaker's fiscal 2026 sales are predicted to rise 44% to $181 billion the following year. Of course, This week will be crucial to keep an eye on other recipients of high AI spending, such as Dell Technologies Incorporated, Broadcom Incorporated, and Super Microcomputer Incorporated. As always, sharing your thoughts and insights in the comments section can foster a more informed community discussion, helping everyone navigate the complexities of investing in this dynamic sector.